Hi, I'm Mehdi and welcome to Your Finance's Crypto Revolution. We're covering all things crypto and digital assets. We're here with Adam Blumberg, co-founder at Interaxis. Adam, welcome back, mate. How you been?
I've been good, Mehdi. Been good. Good to be back here. Missed a week, and good to be back and talking a little crypto.
Well, and the week missed you, that's for sure. So, there's always lots to talk about in the crypto world. But before we get into it, Adam, I hope you've done it. Don't forget to like and subscribe if you want to stay on top of our content. And always feel free to drop us a line. We're here. We'll talk anytime about anything crypto and crypto assets. We're here. So, Adam, there's always lots to talk about. And it's been 2 weeks, so there's even more to talk about. But today is Wednesday, May the 3rd, and it's Fed Day, FOMC meeting at 2 o'clock this afternoon. We're filming this a little bit before then. But, consensus says, rates are going to go up 25 basis points. Who knows whether that'll be the last hike for the year, whether they're going to cut rates, we're going to stabilize and stay on top of it. Who knows? We'll find out soon enough. But, crypto has been it's been, let's take Bitcoin. Bitcoin has been punted as the inflation hedge. The Fed is raising rates to combat inflation, right? In theory, right? So that then comes into a circular argument. We've been seeing Bitcoin come off in concerns of rates going up. We see Bitcoin going down because people, the assumption is that you can gain more money, you can yield more for your money outside of the Bitcoin universe rather than inside it. So, what are your thoughts on this? Are we going to continue in this kind of flow?
I guess so, Mehdi. You and I have talked about this, and you mentioned this kind of circular argument that goes around. And when I teach these courses, I talk about the three reasons why people invest in Bitcoin, right? There's Bitcoin, the revolution, the macro, and the micro. The revolution part, I want to hold an asset that is not fiat currency. It's not, the value of it is not determined by a government. I know what the supply is, all of those things. In addition to the self-custodial aspect, the fact that I can hold Bitcoin, I don't have to worry about banks, that all is playing out exactly like the Bitcoiners expected, right? There, you see inflation, you see governments all over the world devaluing their currency, you see issues with banks, that's playing out. So if you're a person that is reading the news and trying to read what advisors are trying to read, what influencers are saying about Bitcoin, and you read that, you go, oh, wow, this is exactly why I should buy Bitcoin. And therefore, maybe the price should go up. But then you look at the macro factors, and the macro says, look, if there's inflation, Bitcoin should be an inflation hedge. But you have to remember, to be that inflation hedge, it kind of has to be more of a long-term thing. It can't be a 6-month thing in terms of Bitcoin. And why is that? Because then when we go down to the micro level, how is Bitcoin going to be affected in the short term? How is it going to be affected in my portfolio in the next year? You go to a few of the things that you talked about. One, if there's inflation, that means that people don't have more extra money or some extra money at the end of the month to buy Bitcoin with. Just like they don't have extra money to invest in stocks, just like they don't have extra money to do other things with. They're paying more for groceries, they're paying more for their cars, they're paying more for gasoline, all of those things. That's part of inflation. In addition, as you said, interest rates are going up. I have other things I can do with my money. I have a 5% risk-free rate right now on treasuries. We haven't had that in, I don't know, 15, 16 years, something like that. So to be able to get a risk-free rate from the government for that amount, you go, why am I going to take any risk in Bitcoin? And therefore the values go down. So you do have kind of these circular arguments. And I think what determines why I might want to invest in Bitcoin is where I fit within those arguments. Now, the price in my mind is going to be more determined on kind of a short-term basis, again, based on inflation, based on rising interest rates for now. And then eventually you start probably to get those other factors, that macro factor of inflation kicks in, that revolutionary aspect kicks in. And eventually you likely get the price appreciation. But I think the problem is, for a lot of people that kind of follow and read headlines or follow influencers or whatever, they're all saying different things. They're all going to different reasons why the price should go up and go down. What they're not talking about is the time horizon. What they're not talking about is the reason that I might want to invest. And so you're right. There are all sorts of factors that might send the price up, that might send the price down. And what you and I and everyone else is learning is the market's going to do what the market's going to do.
Well, I personally want to invest purely because of the Kingdom of Bhutan. I don't know about you, but is it Bhutanese, the people there?
I would guess so. Maybe we can find one to get on the show
I
one
know.
day.
I was about to say, well, whatever the Bhutanese are doing, I'm in for. But I wasn't even sure if that was the right term for the people of Bhutan. But let's go with the Kingdom of Bhutan. They've kind of been like the ninja Bitcoin miner for years. There's a bunch of articles popping up all over the place. They've been using their renewable energy resources to manage a mining operation. And and strangely enough, they actually kept it secret from their citizens. They're investing and mining Bitcoin to basically give that money ultimately to the citizens of Bhutan, which is quite amazing and phenomenal. So strange that they kept it secret, but they are the ultimate beneficiaries. So outside of the weird secrecy, it's nice to see another state level kind of adoption of Bitcoin, right? We've seen El Salvador and a couple of others do it on a smaller scale, but this is again another step forward on the big macro picture, in my opinion.
I think it is. I think it's interesting because you have the Kingdom of Bhutan that decided, okay, we have hydroelectric power, right? We have renewable energy here. We can utilize this. What can we utilize it for? Well, we can utilize it for energy to light our homes. Well, you can only light your homes to a limit, right? There's a limit to how much you need your homes lit, or there's a limit to how much business you need to do using that energy. So they likely said, well, what else can we do with all this energy we can create? Well, we don't have to spend a whole lot of money to do it. We can mine Bitcoin, right? Why not go ahead and do that? You mentioned El Salvador. They're doing it using using geothermal power, right? Remember the Bitcoin volcano. So why would you not do it? If you have access to pretty much free power, why would you not stick some Bitcoin miners there and mine them? And you mentioned they haven't told their citizens, probably because El Salvador has been very upfront about what they're doing, and they end up kind of being a lightning rod. And so for Bhutan, it's like, hey, we started to do this, and when the value goes up, they get to go, hey, we started doing this 3 years ago. Look how much Bitcoin we have now. We have all this money to hand out to our citizens, or we don't have to print more money, or we can pay our bills. We don't need to tax more. Whatever it is, it ends up being a good play for them. And honestly, if it didn't work out, it probably didn't cost them that much. It's not like here in Texas where you had to go drill for oil or drill for gas or something. They didn't really have to do a whole lot to get it. So it really makes a lot of sense.
It's kind of a no-brainer, right? You've got that excess energy,
Yeah.
utilize it and put it to something that could benefit the rest of the country. So, good for the Bhutanese or the Kingdom of Bhutan. We'll be
Yeah.
keeping a close eye
Let's
on
go
them.
visit. Next thing you know, they're going to have Bitcoin tourism.
And why not?
Right.
I'm in.
Exactly. I'm
So
in.
it's a fantastic world we live in.
Yeah.
So next topic, right? I'm including this in our macro chat because it could just as easily hang out in the adoption universe. We've definitely seen adoption by high frequency traders, and for those that don't know high frequency trading, they're firms like not State Street, Jump Street Trading, Jane Street, Tower Research. These are firms that will basically buy and sell whatever asset it is, very very fast rate, faster than the human eye, and they'll clip little bits of price discrepancies for their profit. And they do that thousands and thousands of times a day, and that basically helps them generate revenue. And it's a wonderful model for high frequency traders. And there's been a lot of controversy. We had was it Michael Lewis wrote a book on Flash Boys, where painting a pseudo negative picture about it. And those in the trading world, some are for it, some say that it adds liquidity, and some say that it doesn't, and it causes false market views. But anyway, that aside, they have been involved in the world of crypto because they do well in volatile assets, and there's definitely money to be made in these volatile assets. So we can almost see them as a prequel to broader institutional adoption. It's kind of the way things have happened historically, where they've got involved quite aggressively, and then as the volatility kind of subsides, the more institutional investors will get involved. So as I mentioned, there's definitely controversy around high frequency trading and liquidity, whether it helps or hinders. What do you think? Do you think that this is a good thing, the high frequency guides in this world? Do you think it helps with adoption? Do you think there's issues with fake liquidity? Like, as a truist in the crypto world, how do you see these, external players?
One, I see it as necessary, right? It's just something that's going to happen. Whether I want it to happen or not, it's just going to happen because there's an asset that is already electronic, right? This is not something where you have to go through, if they were trying to trade true commodities, or they're trying to trade stocks or equities or something, there has to be all sorts of all sorts of entities set up, all sorts of regulatory issues that they have to go through to set up exchanges, broker dealers, all that. In this case, Bitcoin or ETH is already electronic, so there's not a worry there. They can trade it. It adds. I kind of like the idea that it adds liquidity. I think it probably takes away some of the volatility. It allows for more arbitrage because, those firms are the ones that provide quite a bit of the arbitrage, so that prices don't get completely skewed. So you don't have such different prices, for instance, here versus on an exchange in Europe or an exchange in Asia or something like that. So the price of Bitcoin becomes the price of Bitcoin everywhere in the world at roughly the same time, because you have high frequency traders like this that are arbitraging those opportunities to get them to the same point. So if you ask me, is it a good thing? I think it's just a necessary thing of having crypto as part of the overall financial system. And if these high frequency traders decide that there's enough liquidity and enough volume there, because they need quite a bit of liquidity and volume to do what they do profitably, then that's probably a thumbs up for the industry. It's probably a thumbs up for crypto as an asset class, because if Jump and Jane Street are going to, no pun intended, jump in, then they've done their homework, and they understand that there's enough liquidity, that there's enough there are enough opportunities for them, that they're not going to get stranded or stuck or something with no liquidity and no opportunity to get out of their trades.
Well, I think that's definitely something that we should absorb, is the fact that, as you say, they've done their homework, right? And I hate to say it, but you sit there and you wonder who's the smartest guy in the room. Quite often, it is these guys. They are the smartest guy in the room, and good for them. They've done the work, and I do see it kind of as a blessing for institutions to start dabbling your toe. So yeah, I'm all for it. I think great for them. I think good for us because it does bring liquidity. I'm a firm believer that liquidity is just good in all sorts of shapes and forms. So yeah, I take it.
Yeah, I'm good with it. I don't know how it fits me as like a purist, but I don't think it really matters.
Exactly. So, well, if you're good, then I'm good. So, as a purist to a non-purist, it is what it is. I'll take it. So, moving on to our regulatory universe, there's been a couple of things popping up, and one to discuss is the DAME tax, the Digital Asset Mining Energy Tax. It's the White House's proposal to basically make crypto miners pay for the costs that they're imposing on the rest of us, I guess. This was expected.
I don't know if it was expected like this. I think that it is. I'll say this: it's one more instance of the government, and in particular this administration, being extremely short-sighted with regard to crypto and playing into a certain lobby, I believe, that has said that Bitcoin produces these carbon emissions and such. They're using all this energy that wouldn't ordinarily or wouldn't normally be produced otherwise, and they're kind of playing to that crowd. And it's extremely short-sighted. What it's going to do, one, it makes no sense. I don't think the Bitcoin miners are extracting any cost from us, or we're having to pay any extra because of Bitcoin miners. And it shows either that this administration hasn't done their homework, or they have done their homework and they're choosing a particular stance. I think it's been wildly refuted. There's obviously the energy usage of Bitcoin miners that can't be refuted. They use a lot of energy, but as a net, it doesn't really matter. It's not significant. And the way I can tell you that, Mehdi, the way I can better explain that One is, I live in Texas. A couple of years ago, we had a freeze in Texas. A bunch of our energy companies went offline, and millions of people in Texas were left without power with temperatures well below freezing for days. We had, I lost water at my house for over a week. Many people lost power. People died. All of that happened because there wasn't enough power. I'll tell you, we had a freeze this past winter, last winter, or I guess this winter, just a few months ago. No one lost power for the most part. There was plenty of power. And why is that? Because Bitcoin miners have demanded more power, meaning there's more power generation. And when the state needed it, the miners turned off their the Bitcoin miners turned off their machines, and all that power went back to the grid, and there was plenty of power to go around. Bitcoin miners, as we just talked about with Bhutan, will go to whatever the least expensive source of energy is. And if that's renewable, they'll go that direction. If it's natural gas, which is relatively clean, they'll go that direction. They can take Bitcoin mining directly to the source. There doesn't have to be pipelines built or anything else. The other part that's bad about this DAME tax, or whatever we're going to call it, is the miners are going to pick up and move elsewhere. There's no question. There's no way they're going to pay an extra 30% tax. So they're just going to pick up and move elsewhere. So you're basically, the administration is basically saying, we don't want Bitcoin mining in this country. So when they think they're going to make another, $8 billion or something in taxes, they're not, because the miners are just going to leave, right? There's no reason, there's nothing that says Bitcoin miners have to stay in the US if they're going to pay extra. They're going to go to some place like Bhutan that's going to go, look, we got hydroelectric power, plug in, go ahead.
And it's, that kind of moves us on to our next topic quite comfortably as well, that, people are looking, US firms, because of the lack of transparency on this regulatory universe, are starting to get more and more involved outside of the US. We've just seen this week, there was announcements from Coinbase. Coinbase is now opening up shop in Bermuda, is it? And then and our favorite twins, the Gemini brothers, they're going to Singapore, right? So, but why wouldn't you? These are all friendly places towards crypto, and they're in the business of crypto. And if you're trying to keep it in the US, but obviously they have operations in the US, but you've got to diversify because you just don't know what's going to happen in the US.
Exactly. And you and I have talked about it here. Coinbase said, what, last week or the week before, if we need to, we'll just leave the US. We'll completely pick up shop and leave if we have to, which is not a good thing, because it's, a company that decided to play nice with regulators, or try to, a company that is a public company, publicly traded, employs a lot of people, right? It gives us access to an asset that obviously a lot of people want. The market has spoken. We want to own crypto, and Coinbase gives us that. They connect with our banks, all of those things. They provide really good custody, everything that we want. And if they say, all right, we can't deal with this anymore, that's a pretty bad sign for crypto in this country. And, that's the talk of a lot of companies, and a lot of venture capitalists that talk to crypto companies go, look, you'd be better off not setting up shop here. There's not a good reason for you to stay in the US. That's going to mean jobs leave. That's going to mean future jobs are not going to be created here. That's going to mean, taxes aren't created here. All of these problems we're going to see. And I know that so many people in the, kind of traditional economy go, whatever, that's that tiny little asset class, that tiny little crypto thing. It's not really a big deal. Adam and all these other people are exasperated by what the government is doing, that they're going to send jobs elsewhere, but who cares? We have this monster economy. But if you look back and go, what if they did the same thing for the internet? What if all the internet jobs were elsewhere in the world? What would the US be? Right? We'd be an island in terms of communication. We might be the same in terms of money. And I know we have some other topics to talk about that will kind of play into that, but we can't keep pushing companies that are on the forefront of this technology, that are employing Americans, that are trying to develop and innovate here in the US, can't keep pushing them offshore.
Well, that's unfortunately what's being done. And as you said, I think you did nail, and I'm just going to speak for Coinbase, right? Because it's been the most public. I feel like Coinbase has genuinely tried to work with regulators, and not in the FTX kind of way of manipulation. I think they've tried to work in a very fair manner, from what I've seen. And, they've now gone head to head in multiple, or a couple of different ways against the SEC. So things are coming to a head. Rightly or wrongly, it's probably a good thing that they are starting to come to a head, because one way or the other, hopefully it forces the hand of the regulators to make some more decisions, right? And unfortunately, going into an election cycle, we'll see how this all pans out, and whether it's politics that's going to drive this more than anything, which it more than likely will. We'll see what the end implications are of all of this. So, watch this space, kind of thing.
Yep. Yeah. We'll see what happens. Like you said, we have an election cycle coming up next year, and it's going to come down to what people think of crypto and the jobs that could be created, right? Or the jobs that are leaving.
We'll see. It's a balancing act the government has to make, and we'll see, how they decide to play with it.
Yep. They've been wonderful at balancing things, by the way. Wonderful.
No comment. I'm bipartisan. So applications. We touched on this a couple of times through the show today. Mastercard's always been one of my favorites. I feel like I don't have a Mastercard though, which is kind of ironic. They always seem to be leaning into technology. Over the years, I did my final year project on them at university, where they were looking at the automatic payment card system, like the tap and pay and all this type of stuff. So they've always wanted to find new ways of bringing technology and integrating technology and payments. And they've looked at different things over the years, and they've been great. And right now, they are looking to partner with Solana, Avalanche, and other layer twos, and create a common crypto standard. What they have done, interestingly, so I love the fact that they're doing this and they're diving in. I am surprised that they have skipped over Ethereum to partner with some of these other players. Now, Ethereum is still kind of the big boy in the room. So do you think this is a disadvantage in the fact if they're not partnering with Ethereum, who is the big boy in the room, to try and create this this standard?
Well, a few things, right? They partnered with some what we call alt layer ones and some layer two chains. Keep in mind, the ones that they partnered with are a bit more centralized, meaning they can go to the top people, the creators, and go, we want to try to create this standard, and those people at the top can distribute that message and actually help create that standard. Ethereum is a lot harder. Ethereum has been around a long time. It is much more decentralized, and trying to get some sort of standard passed that is driven by Mastercard is going to be a lot harder. So there's probably not a lot of reason. And as we talked about earlier with the high frequency trading firms, Mastercard did their homework. They realized they're not going to get they're not going to get anywhere with Ethereum, right? They're not going to get anywhere for a very long time trying to create this standard. So you might as well go to everyone else. Now, keep in mind, the everyone else that they went to, the Solana, Polygon, Avalanche, and I forget who else, is like they have an interest in trying to work with Mastercard, because that's their way to come close to the transactions of Ethereum, right? That's their way to come close to that. If they say, look, we're working with Mastercard, therefore Mastercard payments are going to be settled on our chain potentially. Therefore, that's their way into more payments. That's their way into more settlement and more usage. Ethereum, I don't think, really needs that, right? As you said, they're already the elephant in the room, whatever we want to call the 800-pound gorilla. I'm mixing up my metaphors and my cliches, but one, they kind of don't need it as much as I think they would like to kind of work with Mastercard. But Ethereum's the way they work is basically, we have a system to set standards. We have ERC, we have EIP, Ethereum Improvement Protocol, Ethereum Request for Comments. We already have a system to standardize. So that's the system we go through. We don't let Mastercard come in and tell us what to do because all these others wanted to do it. If Mastercard wants to submit that, they can go do it just like everybody else. If they want to submit a standard, they can go do it like everybody else. And I don't know if those conversations actually went on, but I have to imagine that's kind of the direction it would go.
So, let's moving on to more of the adoption side, right? So it's interesting to see what Mastercard's doing. We've seen, high frequency guys that have been involved for a while, and now we're seeing more institutional adoption. One of our friends, Jamie Dimon, JP Morgan, they were initially anti-crypto universe, but they've kind of, he's kind of U-turned quite aggressively, right? Where it's now a big old embrace and a bear hug to the crypto asset world. Even while things are a little bit not crypto winter, but it's not necessarily the bull market that everyone would love. JP Morgan's definitely moving forward with with tokenization in spite of this downturn in this market. We've also seen big players on their Onyx-based repo service. Goldman Sachs, BNP, DBS, and some other big banks and brokers are getting involved. Run us through what the implications of this are, because a lot of people don't really know about what's been going on here.
Right. And I think that the comments from Jamie Dimon really revolve around the value of crypto assets, the value of Bitcoin, which of course he doesn't like because his bank custodies dollars. Why would he want a competition? However, the idea of tokenization, which you and I have talked about in regard to BlackRock, Citi, BCG, I think a few weeks ago, is one where they go, oh, well, we can use this blockchain technology to create a more efficient system where we can have assets trade, we can settle them immediately. So why wouldn't we start tokenizing assets? If we're this huge player in the realm of assets, of securities, of commodities moving back and forth, of trades moving back and forth, why wouldn't we use this system? Onyx that they referred to is something they've been working on for a long time. So whereas on one hand, Jamie Dimon, publicly talks about how much he dislikes Bitcoin and doesn't think it has any value, in the background, JP Morgan has done so much in the blockchain world. They issued their own coin. They issued their own stable coin a while ago, for trades to settle within the JP Morgan system, within the JP Morgan Chase system. They've been building Onyx. They've been building tokenized assets, all of these things in the meantime. So what are the implications? The implications to me are more people and more companies, again, are going to have to realize we're moving towards things like instant settlement. We're moving towards more transparency. These are the aspects of blockchain technology that JP Morgan and others really like, and why they want to tokenize assets and tokenize securities. The idea of self-custody, so I can custody assets and trade them on this system. People are going to have to get more used to aspects like that. And again, these are the characteristics of blockchain that make sense and that JP Morgan and others are utilizing to build these systems. Other implications are, look, if they build something like this and it's on a blockchain like Ethereum, we can go, oh, well, maybe the value of ETH goes up because there's going to be more transactions settled. I mean, what have they already done? 700 million or 700 billion? I don't remember what the number is. I think $700 million worth of transactions that JP Morgan has done already on using their Onyx system. So
700 billion.
Billion. Okay, that's a much bigger number. Well, that's a lot of transactions. And if at some point that moves over to Ethereum or the others we talked about, like Solana or Avalanche or whatever, that should mean that native token should go up in value. If you have to have that token to make more transactions happen, and there's more transactions trying to go through in every block, then the value of the token should go up. So you have other ancillary implications, which ironically, Jamie Dimon says he doesn't see the value, and yet he might be the one making the value of the tokens go up.
Kind of got to love Jamie Dimon and JP Morgan. Listen, where there's money to be made, they'll be involved, right? And,
exactly.
It doesn't matter what personal thoughts are. You're not going to leave cash on the table if you're Jamie Dimon or JP Morgan. So, good for them pivoting and getting involved. And he's still very vocal about his personal thoughts, right?
Exactly. I have a feeling that Jamie Dimon's got some Bitcoin stashed away.
I wouldn't be shocked. We'll find out one day.
Right.
So let's wrap with some of our NFT marketplace commentary, right? So we've got Sotheby's. They're launching an on-chain secondary NFT marketplace. This is super cool. And I kind of want to preempt this with, I think next week we'll have a bit more chat on NFTs. But what do you think about this? This is bringing it to the people.
Yeah, I think so. Sotheby's and Sotheby's has been pretty upfront in terms of NFTs. They were one of those first auction houses to actually auction off NFTs, I believe. They have been in the metaverse. They've had metaverse properties. And I think what they're doing now is they're creating this marketplace within metaverses to allow those that are participating in the metaverse to actually, directly exchange NFTs via this marketplace. I think it's look, it's the direction it's got to go. And eventually these NFTs right now, they represent digital art. Sotheby's knows that eventually the NFT is probably going to represent real art. Like the art I have back there is probably going to be represented by a token. They know that, other luxury goods, other collectibles, all of that, the things that they auction off are going to be represented by tokens. And so they're starting to build the marketplace out with the enthusiasts right now, those that are enthusiastic about art-based NFTs, and know that that marketplace is just going to be how they do business quite a bit in the future. There's going to be marketplaces, auction houses and such that they can exist in what we call the metaverse, whatever. But the key is there's going to be an NFT marketplace, and those tokens, those non-fungible tokens, are going to represent luxury goods, collectible items and such that aren't just digital art. It's going to be real art. It's going to be real collectibles. It's going to be real luxury cars, whatever it might be. They know it's coming. Again, another one of those companies that's done their homework, that is not just doing this because it's a fad. They know where the market's going, and they're going to make sure that they're not left out.
And what a great way to see what's happening on chain and paid royalties to the underlying artists. So it's simplifying everything. So bring it on.
Exactly.
And next week, Adam, maybe we should focus a little bit more on NFTs, and we'll have a little bit more of a deep dive and see where the state of NFTs are. Considering I'm a 180-degree transformed person on the world of NFTs, and I'm a huge believer at this point. It was the Taco Bell ones that completely threw me off early doors, but I've gotten over that. I've done a Jamie Dimon, and I'm now embracing the technology.
Good. I'm glad we could convert you.
Fantastic. And Adam, as always, thank you so much for talking to us about crypto assets. I love it. And don't forget, viewers, I would urge you to check out Adam's courses. The links below for digital assets and crypto education, interaxis.io. So please check that out. And next week, Adam, I look forward to chatting again.
I look forward to it, Mehdi. I'm sure there'll be plenty to talk about in a week.
Absolutely. Until next time, good luck investing.